Hello, everyone, and welcome back. Just testing the sound here while I'm getting everything I want to caught up. That seems to work fine. Let's just finish doing. All right. Okay, so again, thank you, everyone. Let's go to this. And oh, geez, just got in from outside digging stuff. That's not what I meant to do. I meant this right here. Audio works perfect. Okay, guys. So again, if you're new to these streams or if you're watching the video after, this is where I take an hour or so. We review what the markets did last week. We prepare for what we think the markets may do next week. Scan through a handful of stocks, come up with the one that I'm going to make that short video about that I do every day. We'll talk about all of the ones that I did last week and how they worked and how I traded them. And then we'll wrap that up and go from there. And then I'll go make the video for next week and upload that and try to make that live. The other thing I wanted to quickly say is, first of all, thank you everyone who signed up for the first few weeks of Stats Edge Pro. That seems to be going very well. If you guys don't know what that is, go to the link I will post in the chat, but it's also always in the description, which is my website. I've got some t-shirts coming in. Essentially, what it is that for $49.99 US a month, you get to read a newsletter I put out, which is essentially kind of my trading journal about stocks that I'm interested in, what I think of both the crypto and the equity markets, and then also areas that I'm looking for stocks, a watch list of stocks for the next day. You have access to all of my scans that I use to find those and that I use to play with those. And then we've got a little live room where if I see something midday on Discord, I'll just type in a chat, hit enter, and say, hey guys, take a look at this. So again, thank you everyone for who've signed up to begin with, and the people who are there will tell you we're constantly moving and shifting things to try to figure out what the best style is for it. But I think we've got something nailed down. So we'll talk about a little bit more about that at the end. So first, let's get into my thoughts of the market, and then we will go through those short videos I made last week and how those went. And then again, finally, we'll scan through the market and figure out what's going on, what I think I'm going to make a video about on the weekends for one stock that I'm interested in for Monday. After that, we'll go through and I'll just show you around the Stats Edge product and what that looks like for the people who stick around that long and are interested. And finally, ask questions throughout, right? If you say, hey, why do you think that, or whatever, just ask questions and I'll answer them as they come. Because if I just wanted to do this without any sort of community interaction, I would just do it and upload a video or something like that. So let's get into it. So first of all, I always start with the crypto markets. Full disclosure, I do have a short going on Bitcoin that I talked about in the Stats Edge Pro. Basically, just struggled at the 200 period moving average. Put in this doji, which is quite often a good indecision or reversal type candle. So I took a short under that, and I'm still in the full position here. If we get a bounce from here, I'll probably exit a large chunk of it and look to re-enter higher. Basically, just right, can't stay over 40,000. That's kind of going to be the level for a bit. We have the 200 period here that's actually starting to coil down, which looks very bearish. And again, the second we hit that put in a doji, reversed off it. It's your typical breakdown, retest, failure. Now, if we fail from here, where do we go? I don't know. 18,000 or so was the prior highs. You can see when we had a little bit of resistance around here, around 20. That would be kind of the area that you would think that if the buyers come in to defend on another breakdown here, it would have to be there. If not, do we go back to 4? Hopefully not, but we'll see, right? First area we obviously have to get through is kind of right here at 33,000, just under these lows. If we get under here, then there's a potential that we can make that push lower into the 20,000s. That's where I'd be covering and maybe considering a longer term buy where I look at it and I say, okay, let me start accumulating slowly kind of in this area to see if at some point we're going to bounce higher. That's just for that one. Actually, let me change this to, I had a crypto watch list right there. Ether, same kind of thing. This one actually looks a little bit weaker. So if we go to Bitcoin, we can see that we are kind of right at or above these lows right here. If you go over to Ether, you can see we're actually breaking down those same lows. So although longer term, this has been bullish because we're still sitting above the 200 period and Bitcoin's not. Shorter term, there's actually a little bit of weakness, which we'll go over when I go over the comparison charts in a second. A little bit of weakness to this. Bitcoin Cash looks pretty much exactly like Bitcoin. Ripple looks, again, all of these are all descending triangles, right? These are all exhibiting bearish patterns. I would not participate in any of these unless we break that downtrend this way. They're all looking pretty bearish to me. Litecoin, same kind of thing. Looks like it may break down here. And then Dogecoin, again, they all have the same look. We're back. We had a little bit of a break of correlation before. It doesn't really look like it's going back now, right? We're going back and just dealing with that just like we did. So I'm actually going to edit this, and I'm going to add, because I've started watching ADA Cardano. I watched a really cool podcast with Lex Friedman and the ADA guy, and that was interesting as well. But same look. But if we zoom out on Cardano versus the other ones, relatively speaking, and by relative I mean just compare how close we are to the highs here. This one's actually been doing pretty good. So if I was looking to buy a crypto, which I'm just not right now, I would look at Cardano out of anything. And then just the rest of them, again, crypto just looks very bearish to me. That's going to be the big summary there. Okay, so next I like to go through and I like to say, okay, well, actually, let's first look at the overall market. We kind of all know what happened, but it does look a little bit bad here. So you can see here on the SPY, we were talking about this 423 area for a long time, and it looks like we may have been in a bull trap is kind of what I'm seeing. So for example, what's happening here is that this chopping sideways we're doing, we expected this to resolve in the direction of the trend, which is higher. And we broke and we put 2 days there and we actually held pretty good above it. And then we had this day, which was the FOMC meetings. So I told all the people in the room, I was like, listen, we got to watch the low of that day. If that gets violated, then we start to get worried. And that happened on Friday, and we sold off all day and closed at the lows. Not a good sign. An insult to injury that I want to point out here is just this RSI. Get it here. And essentially, an RSI divergence is when you have higher highs on whatever instrument you're looking at, and then lower highs in the RSI. And essentially, what that generally means is that there's momentum dying on the way up. So each consecutive higher high takes a a higher, a less amount of momentum gets us there. So there's less strength in every up move and move. And some people can kind of look at that and say, well, if momentum is dying, then one second here. If momentum's dying on the way up, then that may mean that if a large bear or large seller comes in and pushes that instrument lower, well, there was less momentum to push it up higher. So it's basically, think of, you slam a ball on the ground and it bounces, and then each time it bounces less high because there's not that momentum going in behind it. Again, whether or not they work is something I'm still studying, but I have seen them work so much that RSI has actually gotten a bit of a permanent space on my chart. So that's a bit bearish and a bit worrisome. But if we also go in and we check out the Qs, which are having the same type of move, right? We have these highs here, and then we have these highs that are higher. Well, at the same time, the RSI here is pushing down. So does that tell us that tech, which was kind of our saving grace, is going to follow the SPY, in which, right, it broke out of its high just like the SPY did, but on this declining momentum? So will that fall back in place as well? If it does, then we're kind of in a full-on everything tanking bear market mode. So what I mentioned, hold on, close my window here. Yard work about to happen. Oh, I've gotten uncomfortably close to that camera, haven't I? So basically, on Friday, what I did is I looked at any position that I had that wasn't doing well, and I killed it. Anything that's still working, I want to stick with those. I want to sell the weak ones, the losers first, which is something that, funny enough, not a lot of traders do. They want to hold on to the losers and hope they come back, and they want to sell their winners because they're worried they'll give back those profits. Generally speaking, what you want to do is completely the opposite. If the stock's not working and the market's going up, then it's probably not going to work when the market's going down, and vice versa with, the stuff that has been strong, even in these kind of choppy markets, will probably continue to be strong. So in the interim, that's how I've dealt with it. I've said, okay, anything that wasn't working on Friday, I killed, just to figure, if I'm wrong and we just turn from here and push higher, which certainly could happen, then I'm wrong, and I took some losers off the table, and I have some capital for Monday to redeploy to hopefully some better ideas that we find today. If I'm right, it means that I got rid of the weakest positions in my portfolio, and I've loaded up on some cash so that if the market falls and the positions that I have in there fall with it, it won't hurt as bad, and I'll have a bunch of capital waiting to buy stocks that look like they're setting up well, or buy inverse ETFs, which is my way of shorting the market, and it's just simply because I find that it's been an easier way to short the market than anything else. Let's go into market dashboard and U.S. sectors. Let's try this again. Let's refresh. This is where I want to. Oh, that's not a good thing. Network error. Okay. So I'm still streaming, so it's not on my end. So let's go back to Koifin in a bit. Let's close this and try again. They may be doing some updates or something on the weekend. Maybe I just need it to reload. No, failed to fetch. Okay, that's fine. Because let's just look through them. So XLK, we have our tech ETF. You can see that did kind of the same thing, where it broke through this area, but just a little bit. And then we have this declining RSI, XLE, which was the strongest for the longest time. We did have, I was interested if we broke out here, participating in some energy names. Never happened, so we fell down, so that one looks bad. The other one that looked really bad was XLB, which is our materials. Right, that one's been selling off dramatically. This software right here, this is TrendSpider. Link in the description below for this one. It's a charting software. I generally use Trade Ideas for most of my charting, but when it comes to crypto and things like that Trade Ideas doesn't have, I take a look at this instead. But most of the charting that I do in this one. So long story short, when it comes to no problem. When it comes to the equity markets, is I am slightly worried where everything looks like we may have gotten a bit of a bull trap. But that being said, I want to make sure that we know that every other time recently when we've had these big pullbacks, they've been met with buying, right? So this right here is starting to look a lot like this right here, which was just met again with buying. Is this time different? I don't know. I think 400 is the area to watch. If we pull back to around 400 and then start to move higher, then it was just a pullback in a bull market, which right now it is just a pullback in a bull market until otherwise. If it breaks down 400 here, then I think it could we could be in for a pullback, which that's just how markets go. It will be interesting to see. We can get all the way back to this area. So we can pull all the way down to 330 before we are under kind of the breakout area of post-pan or pre-pandemic highs. So could it happen? Certainly. Does it mean that I'm just going to flat out short the market on Monday and walk away? Absolutely not. But I am going to be more selective and be more inclined to buy pullbacks than breakouts in this market. And that's, again, how I switch to these type of things. What I'll do instead of in bull markets where I look to buy stocks as they're breaking to new highs, I will wait for stocks to come and pull back, find a support type of area that I want to take a shot in, and purchase them there, hoping for a bounce because I can keep my risk super, super tiny. And this allows me to, build a little bit of portfolio. So that's how I'm going to change that. Last thing I want to look at is my comparison charts right here. And first we'll look at Bitcoin and Ether. And you can see that during the breakout, which was happening in through here, Ethereum was doing way, way better than Bitcoin. Now it looks like that may have reversed and Bitcoin may turn in to be the leader. I don't know. I'm currently short Bitcoin, but this just confirms the other stuff that we found on the charts when we were going through and talking about those things. This ratio chart is essentially growth versus value. So as this moves lower, value is outperforming, and as it moves higher, growth is outperforming. It looks like we are entering a stage where growth is going to outperform again, which is going to be good. It helps us out a little bit. Lastly, I want to look at XLE TAN, which this is the rounded bottom that I was looking at, and this is basically dirty energy versus clean energy. And it looks like clean energy may actually start to catch up again here. So we end up pushing, if that's true, then this just ends up being a pull up and a downtrend. If this occurs and you start to see this ratio break down, that's when you want to look at EVs and, solar charging centers and all of this kind of stuff in an environment like that. And are you still, oops. Yeah, okay. So we just won't look at that one right now. We'll look at that one in a little bit. All right, so next what I'm going to do is I'm going to go to the YouTube channel here, which I have to redo that URL in a moment. and we will go into, I gotta edit this main page too. And yeah, let's go into videos and take a look. Okay, so the last one we had right here last week was Fizz. I already know I didn't do anything with Fizz. We were looking at Fizz kind of in this area right here to see if it would break out. Didn't, fell down with a lot of the other meme stocks that got killed. SKLZ, same type of thing. SKLZ, I think we were looking at right in this area. We were looking for a bounce. Yeah, because it was breakout and it was pullback, and then I was looking for a bounce here. This one, to be honest, I'm actually going to set a price alert back over 20 and keep this on watch, because right now what we have to start doing is we have to start comparing everything to the overall market, right? So always keep this image in your head of the last 4 days being pretty much straight down, and then compare that to whatever stock you're looking at. Skills, although it was down, the last 3 or 4 days it's kind of based sideways. So Skills, I'm still going to watch to see if we get that over 20, but no trade there. PRAX, no trade on this one, but still like it. I don't think I may have to look at my position, but basically what I'm looking at on this one is this bottoming formation that's going on, just to see if we break above and basically end the downtrend. I 99% sure I didn't take a trade on this one. But again, a break and hold over 23 could be interesting. And then last was CRYX, which I didn't. I know it just pulled right back as well. That's always why I kind of say, hey, I'm interested. Man, see. Okay, Michael. YRX. Dyslexia is hard. This one I still like because it's just in this bull flag right here, and again, really outperforming the market. But the main reason I always say, hey, I want a stock to do something, is for situations like last week when things kind of fall apart. So basically, I didn't do anything with these ones, but these are the ones that I'm still interested in. CRYX being a big one. One that I'm going to watch kind of going into next week. Keep that same list afloat with that. So, getting faster and faster at this. So, summarize, crypto markets look bearish. Equity markets starting to look bearish, worrisome enough in a way for me that I am less inclined to buy things and moving into cash. And what I'll, an example I'll give of how I trade markets like this is X. I bought some X probably maybe halfway up this candle yesterday. Just near or under this line. I remember I think I split my buy up into two, and I bought a little bit up here and then a little bit down here. So my entry area is down there, and that's more or less. So I wonder if how I can show you guys this. Oh, what did I do there? Oh, that's interesting. I may make it easier to see sometimes. I may not be able to visualize this, but for those who have not traded a bear market, not saying a bear market's coming, we're like 4 days we're like 5% off all-time highs, just FYI. But with the things I'm seeing that look a little bit worrisome, I just want to say how I change my trading if and when a bear market occurs. So the first one is I generally don't short stocks. I've done my math on my own trading. I'm just not great at it, so I don't look to short stocks for swings overnight. There's a lot of risk to that as well. So what I will do is generally buy inverse ETFs, right? So you can buy like TZA, right? This will move opposite to what the IWM does. QID. Will you move the opposite to the Qs? Things like this. Note that these are assets designed to slowly depreciate in value. It's just what they do. So these are for quick hits. And what I'll tell you is that, again, for people who've never seen a bear market, which I know there's going to be a lot of you, because we haven't really had one. I don't even really consider the pandemic crash one. That was a crash and a bounce. So last bear market, I'm talking 2008 area. One thing is that shorting new lows is a rough game in a bear market. It generally doesn't work because what happens is, as much as people hate the evil shorts, is when you're short and the market tanks, these short sellers come in and they buy like crazy, and then the dip buyers buy, and then the FOMO people buy, and all of this happens. So in bear markets is actually where you get the strongest rallies, right? So you may drop 10% in a bear market and in the next 2 or 3 days have a 5 to 10%, rip your face off bounce before sellers come back in and push it down. So if you're looking to short in a bear market, I suggest shorting rips instead of shorting breakdowns. It's just step one that I look at anyway. Step two, back to my X example. So, for example, what I may do is say the Qs sell off and then look to bounce here and then start to maybe roll over. I'll try to time a short there, as opposed to waiting for that new low to be made and then taking the short there, because those rip your face off rallies are huge. The second, because those, and again, that's just an industry term that's funny, is a rip your face off rally means you were betting for the stock to come down and then it pops up in your face. What I will do is I will bid into falling stocks. And this is hard and it's dangerous and I don't like trading like this, but it's just kind of the way that I do it. Just rearranging this at the same time, so hopefully you guys see a little bit more. So what I will do is I will wait for pullbacks on stocks that are strong relatively even in the bear market, and I'll pick my point. So like I'm doing here with X. The theory with X is I buy in here. If it gets kind of under this low, I'm out. So I'm risking this. And if we bounce even halfway back up to that other side, then I get my 2-to-1 risk reward. That is more or less what I will do, as opposed to looking to buy when it gets up here in a breakout. Little nuance changes that you do have to make to your trading when the market turns, and that's just the nature of trading. Again, that's why it's important to not just lean on an algorithm, but to have an algorithm with your own kind of mindset behind it. So that's the way I'm going to look to change my trading. So coming into next week, just being said, what I'm looking for is two things into next week. One, I'm looking for stocks that did not participate in the sell-off last week. Maybe they're down a bit, but they're relatively way stronger than the market. The second, I'm looking for stocks that are pulling back, but maybe they're pulling back to an area in which I can catch a short-term bounce. Last thing I'll say, I know I'm ranting a lot about this. I don't know if people are getting a lot of value from this, but I'm ranting a lot about what will happen if we turn into a bear market. Again, that relative strength is huge, and you have to be fast in a bear market. So if you're not able to be fast, and I'm not talking day trading, I'm talking swing trading, is if you don't have the ability to set alerts, have those alerts trigger, quickly grab your phone, sell your stock, you should just sit out entirely until they recover, right? You can put your money in something else, you can just hang out, maybe take a trade when you have the time. But because those rips happen and they happen big, is basically if I've picked even near a right point here, let's say I'm in at 23, which I think is about right, just to make it easy. If I get a $2-3 point, I've made 10% on my money, and that could happen on something like X in like a day. Whereas in bull markets, those things may take longer to occur. In bear markets, you get a lot of these bounces, and you've got to be selling into those bounces, which is what kind of perpetuates a bear market. So be fast, look for relative strength, understand that things are going to move way more. So you can make the same amount of money with way less shares. So lower your size. And then just understand that buying breakouts in a less than healthy market, let's just call it, isn't as good as it is when you're doing it in a bull or a raging bull market, right? So again, pullbacks, things like this. Now, let's get into the scanning. Ask questions as they come, but basically what I'm going to do now is I'm going to scan. I'm going to put together a watch list of stocks that interest me, and I'm going to go through and then talk about which one I'm going to make for next week's video, and then we'll talk a little bit about Stats Edge Pro, and then we'll call it. So then I'll go and I'll make that video for new people on YouTube, and then I'm going to go do the newsletter for the Stats Edge Pro product. This is one I think, Brett, you were talking about. Airbnb looks interesting. Again, I just can't buy these kind of breakout moves in the market that's interesting, that's pulling back here. This is more something that I would be interested in if it was more of a mover, which it's not. And that's just because, again, this is pulled back. But if you notice the last 3 days or so with the market selling, this hasn't sold nearly as much. Let's actually do this one last. This is the one I want to do first. This is a pullback scanner. And what I'm going to do is I'm going to look for stocks that I think I have this sorted by short float. So these are going to be high short float names that I think are pulling back into an area that they could be met with buyers. And mainly, see their skills. And mainly what I'm looking for is pullbacks to areas that were once breakout areas. Let's see if I can find. So this one kind of, I don't super like this one, but I am going to put this on watch for break over this doji. But this, and this is answer your question, the in the pocket scan that I have on the Stats Edge Pro, I'd say is probably my favorite bear market type scan. And this is what I want to look for, is that, okay, so yes, this sold off with the market last week, so that's a knock against it. However, it's sold right to this area right here, and then it's put in this doji, right? So we all know it's in all the textbooks. Prior support can become future resistance, and vice versa. Prior resistance can become future support. The reason that is just this price has memories, right? If you bought right here and then maybe you sold out here, you may remember the last price you bought and you might do it again. The fact that there's a doji here kind of shows me a lot of indecision. So a break above this doji could push us a little bit higher here. But again, I'm looking for bounce plays. I'm looking for, if it breaks the high of that doji, I want in. I want to hold for a couple days, maybe 1 or 2, and then back out. Again, until the markets at least settle a bit, right? The pullback scan is, for both Trend Spider and Trade Ideas. Should be. If not, let me know and I'll put it in there. This one has a little bit of customs with it. So I've got this sorted by short float because I'm looking for things that if they bounce, they'll bounce pretty dramatically. And again, ideally, I want stocks that haven't sold off as much as the market has, right? So if we look, let's go to here, and then let's go into here, and then let's go SPY, right? So if we look from, make that a candle. So if we just look here from high to low, we're down, right, 2.5% off all-time highs. That's why I really want to say, hey, let's watch the sky is falling stuff, right? But so then I want something that is not so much as on a percentage basis, but I want something that's pulling back into an area that possibly it could bounce from, in my mind, and go from there. So ICPT, 27% short float, very, very strong and then pulling back a bit, right? The point is to see if you can buy it on a little bit of strength, and then when it breaks these highs, which isn't working as much recently, if it breaks those highs, then you're already selling, not if not all of it, you're selling a chunk to those people, and then just kind of moving on from there. So I like ICPT as well. ASO looks great, but that's a little way too strong. Short hold time perform well. That's an interesting one. Twinkies. So yeah, so ideally the stocks I'm looking for bounced up, they're pulling back, they're kind of hanging around the breakout area, which this one is as well. I know this is one of the meme stocks, so that kind of makes me a little bit more wary. But you can see broke out of this area, pulled back to it. So maybe if this gets back over 10 bucks, you can get a little pop up, right? The other thing that I'll do in a full-on bear market is I will become much more of a day trader. That's essentially, if things go crazy, like during the pandemic crash, I was day trading like a monster. The theory or the idea behind that is that, you want to make sure that when the VIX is high, basically it just means that stocks are going to move way more than they normally do. So when the VIX is high and stocks are going to move way more than they normally do, you're able to go, okay, well, if that's true, then I can make, instead of trying to make 5% or so on a swing and take a couple days, I can make 5% on a day trade a little bit more consistently and be in and out easier. Right. So what I will do is then I'll take a look at that and say, okay, I want to look for more of the day trading side of things. And that's just because when the VIX is higher, you can do something like take an opening range break on a stock and know that there's that volatility and momentum to carry you. Whereas when the VIX is low and you're looking to more swing trade, you're just not going to get that. SFIX Stitch Fix is looking interesting here as well. Again, exactly what we were looking for. We're looking for stocks that are pulling back more orderly than the SPY. Because remember, let's always go back and let's see, right? 1, 2, 3, 4 days down pretty much right in a row, right? We go to SFIX and then we say, okay, well, the last 3 days we actually based instead of falling down. And we are right at this prior resistance area, potentially becoming support. So on a little bit of short-term strength, maybe we buy that there, right? Maybe that continues the earnings up to here. Who knows? But relatively, and again, you always have to look, when I talk about relative strength, you have to look at your time frame and just say, hey, is my time frame, if my time frame's 2 or 3 days, I want to look at stocks that outperform the market in the last 2 or 3 days. Which again, I think is way more important to the downside than the up. When things are moving up, you can wait for resistance breaks and things. I'm going to put this one back on watch too. This laser. Took a loss on this one earlier in the week. Actually bought it right here and then stopped out, I think the next day, right there. If it gets back over Thursday's high, maybe it could get going. 15% short float. And again, I like the ascending triangle there. So that one will go and watch. RKT. RKT is probably going to be very similar to that UWMC. But that UWMC is going to have, I think that UWMC has a higher short float. So we'll leave that one as well. Let's look at the rounded bottom just to see. Again, stocks. So ARLY Therapeutics, 13% short float, 52 million shares in the float. This one looks very interesting to me because in the last few days, this was actually holding up and it's kind of right at a resistance area. So it did this, what we were looking for, where it pulled back during that down play in the market, and it pulled back to here. So if that breaks up here, right, that just confirms a lot of relative strength. I like these candle patterns too. Let me zoom in to show you, in which you had, right, a big strong push up. The next morning they gap it down, but then the buyers come in and they close it right at highs again. So even this gap down didn't phase the sellers. So this one is going on watch, and it's the one that I'm the most interested in right now. VIR, I just don't think it's going to move as much. Why careful with Rocket? What's Rocket up to? Keeping in mind I don't care about news or anything like that. Okay, that's all of that. And then last, I think this squeeze test will be interesting. So this is looking for stocks that are consolidating, which generally means they can't be selling off in the way that the market is. That one I'm going to put on, but that's just for me. This is one of those times that I really don't know if I'd recommend this to other people, but if I can snag some of this stock around that area, maybe put in a bid on Monday and just pull back, see if we can get a pullback into this area. These new IPOs can really get going. Oh yeah, meme stock, but right, everything's short float seems to be meme stock at some point, except Posh, which actually did well, relatively well on Friday. I bought some Posh here, and then I got stopped out here, and then I tried some again here. So then let's see what happens. Because I know that UWMC is a meme stock too, but you know, I just don't know how long I can avoid playing that stuff. I still have my GameStop short, but we'll see. No one get mad at me. I'm just a trader. Yeah, now we're into the 3% shorts. So you'll notice that I'm scanning a lot less this week than most weeks, and it's just because there's not as much going on because the market is sold off so dramatically. And I think kind of the point there is that I like to use, and I think it's something that makes sense, is to use your scans as a bit of a guide to say, if you can't find anything with your scans, if you find yourself just scanning and scanning and scanning, really looking for a stock that meets your setup, it probably means that it's time to just kind of chill out and let whatever is going to happen. Just means, right, nothing's meeting whatever your trading criteria is, right? And there's nothing wrong with having nothing that meets your trading criteria. It just means there's nothing to do. I mean, go outside, hang out. Pharmaceuticals, so many pharmaceuticals in here. This is another interesting one. Again, the last 4 days, we got to remember the market was super bearish. This is actually near its highs of the last 4 or 5 days, so relatively strong to the market. Holding the short-term moving averages here. Closed at highs on Friday. 20% short float, only 21 million shares in the float. So it's a fairly low floater. AMRN, I just didn't like that there wasn't enough room. I think you probably saw me look at it for a few seconds more. But this is 5, and then all the way up here is 6. So it's just, I always look at how much, and this is just goes to a chat about capital efficiency, but it's just one of those things that for me to make I got to look at it and I got to say, not only do I want to make multiple times my risk, which is obviously the most important thing, and I could risk a small amount, but how much would I need to buy out of this to make, if I'm right, to make enough money for that risk? Because you're always calculating risk based off a stop loss, but it's possible that the market takes a dump. There's possible that, right, you get this movement. So I just looked at it and said, I'd have to buy. I very much try to not talk profit numbers because it's irrelevant, right? My account's different than your account's different than the other people's account. Let's say, for example, on a good trade, I want to make $1,000 just to make the math easy on me, right? I would have to, and I'm risking 20 cents a trade, right? I would have to take 2,000 and say, all right, so I want to make 40. Oh God, you're going to make me do math on stream, aren't you? Moral of the story, without going in, I don't think the math is important anyway. Moral of the story is I would have to buy a lot of this to make enough that a 50-cent move is going to make me that money. I'd have to buy about 3,000 shares. On a dollar amount, that's not that bad, but it's just the less the stock has to move to get to your profit target on a dollar basis, the more precise you have to be, right? I guess that's where I'm trying to get at. If you're risking 20 cents on the way down to make 40 cents on the way up, you have to be very, very precise in your entry, and that's harder. If I'm trying to make $2 and I'm risking $1, I can be way less precise on my entry, right? That's how I'm going to avoid doing math on stream. It's funny, as the math guy, I'm really shit at mental math. Draw a line left from the current tops. Hold on. And again, I also know this list I'm scanning through now has 240 symbols in it, right? So the real question is, how long do I want to spend on this one symbol and then go from there? So yeah, I get it. If we draw that, right, we see the resistance here and support here. So it could be interesting, but if it gets into the gap here, again, I would just need to buy too much. The downside's only 20 cents, right? So you're shooting to make 40 cents. So say you wanted to make 10 grand on this trade. How many shares you got to buy, right? And is that a position on a pharmaceutical name from India? Ireland. Jeez, that is a bad flag call on that one. An overseas pharmaceutical play, do you want to have to buy that many shares in order to have it make that much money, right? Wherefore, example, this bee fly has the same type of look to it, whereas I could buy way less shares and commit way less money to the trade and potentially make the same amount. And that's something that you can read about. A lot of options people talk about. And this is why I do these things live. I like having these chats. Don't be sorry, but it's just, you got to make sure that you're look into capital efficiency, right? And that's basically it. It's just saying, not only do I have to look at my risk reward, but I have to look at how much capital I have to apply to this trade. This blue trade is so annoying. It was a good trade. I made money off it, and then it pulled back and stopped me out. The rest flat. Now it looks like it might go again, but we'll see. Bingo. BNGO. So again, just back to our chat, for example, this one looks interesting because it is pulling back and it's holding strong at this area. Maybe could push up, but here is 8 and here is 10, right? So I can still make that same 20% or so on my trade, but I could do so with committing far less capital intensive to that trade. So I just don't need to like pile in to a cheaper stock. And again, it's not, I guess cheap isn't the thing, not so much. Same reason I wouldn't trade like, you know, I don't trade like GE, right? Is because, yeah, you know, they had a bit of movement recently, but it's generally speaking, the average shoe range of this is very, very low. And that's I guess if you wanted to quantify why I don't look at certain things is look at ATR as a percentage, right? If your stock moves 1% a day, you know, it's going to take you on average way more time and you're going to have to dedicate way more capital than if your stock moves 10% a day. If you can find a stock that moves 10% a day, you can make way more. You can make, sorry, not way more, the same amount of money with less potential capital. I may take this COUR again. I took this, I think at $40 rings a bell on this one. And I think I took this trade up and then got stopped out here. Now it's basing sideways. This purple line that I drew is the anchored VWAP from the IPO price. And what all that means is this is where from the opening price, this purple line right here is where the average market participant exists. So the average market participant exists right under this price. So that means there may be a chance that they defend this price. So I'm actually going to I should make a note as we go here of these COUR. That one's very interesting to me. We'll go through. I have a watch list that I'm making of these as things go. Casper. And there's that CRYX. I still like it, but that was the video for Friday. So that's one I'm going to probably put on my watch list for Monday, but I'm not going to make that the video because it's still valid from the video that I made. Medical laboratories. That's always nice. I don't check this as much as I think I should, but insider buying is better than insider selling. Company dermatology. So I'm going to add this one. I like this one. So basically what I do first is I cast a pretty wide net. And this is just, I guess, my scanning philosophy for everything. Step one is I cast a pretty wide net. I say, hey, get me everything that's kind of remotely interesting to me, that's meeting the criteria that I went in to scan that day. So I do my market analysis first for this reason. It's because I want to look at the market and say, okay, I'm fairly worried about what the short-term outlook is for the market. So then now let me go in and look for stocks that have been really outperforming that market and look like they may be setting up for a move higher. As well as, and I just need to find it, I'll do more of that. I went through that whole pullback scan, but you know, not only stocks that were outperforming, but stocks like X that are at areas that I deem them interesting. Geez, rolling into the F's with this one. Oh, FUBO. FUBO's a memer too, isn't it? FUBO TV. Jeez, yeah, I like that one. I don't care if it's a meme stock. It's not one of the insane meme stocks that have like quintupled in value from zero, right? Let me go over here, take a look at that. Yeah, I've seen way crazier stocks out there. And we have a 21% short float, fairly low float. Got this kind of base sideways right here. Above this, maybe we get a move into 35s or 40. That's about 10%. It's interesting. You like that red candle? What red candle? So yeah, I really like the look of this FUBO. That's so far going to be the one that I'm interested in watching. Just a simple technical bull flag, right? Strong push up, sideways chop, go from there. That's a doji, this last candle. Right? So again, if we look at the SPY, fell apart. We look at FUBO, a doji, and I love, you know how I love dojis, right? Just indecision right at the kind of height of the that candle, right? So dojis, for again, for the people here who are newer traders or learning or just lurking, a doji is just like this, right? Where your open and close exists in the same spot. So basically, if you translate this to what happened intraday, it means, I don't know what order these happened in, but it doesn't really matter for this candle. Is stock pushed up, and then sellers came in and pushed it all the way back down, and then buyers came back in and it pushed it right up to where it opened, like almost to the tick right there. So basically, it means that sellers tried, got rejected. Buyers tried, got rejected right in the middle. This creates an area of indecision, an area of inaction, of, oh, we don't know where the stock's going to go next because we tried this way and it didn't work, and we tried this way and it didn't work. What's going to happen? And these areas of confusion, when they get broken and when they get kind of pushed in one way or the other, they can really kind of resolve, because not only do you have the buyers who tried yesterday feeling good, but you also have the sellers that tried yesterday kind of following up on that one. So I have just talked myself into FUBO is going to be the video for next week. But let's just, unless something comes along, let's just keep doing some scanning here. I need to beef up this scan a bit. 250 results is far too many results. That's a strong one. 290,000 shares. GTP. Like that one. Just nice bull flag. Again, very much outperforming what the market was doing. HOL. Is this a SPAC? Yeah, blank check company. You have to do too much fundamental research to really get in kind of the head of a SPAC. All right, we're down to the I's. You can tell this one's in alphabetical order. INSG, 24% short float. That one's holding strong. A lot of pharmaceutical stuff. I'll take a look at those. Just let me finish A, B, C, D, F, G, H, I. Oh, man. I'm going to go quick through the rest of these guys, and then I'll take some, put in your, I guess, chart requests, I guess. Also, when you put in your stocks that you're looking for, also please specify a time frame that you're looking at them. Just one of those things that, another pharmaceutical. I just need to know. I may look at that and say, well, for my time frame, which is just a couple days to maybe a couple weeks, it looks like this, and you may be a day trader, you may be a short-term or a long-term investor, right? And so you're looking at it at a different time frame, so therefore it's going to look a bit different to you. It's why you know, I'm short Bitcoin now, but I'm looking to buy Bitcoin if it sells, because, you know, I'm just thinking that my time frame for trading and for scalping is very short term. But if the market tanks for a long term look and a long term investment, I kind of like Bitcoin around that $20,000 area. But that means I'll buy enough of it that if it goes to zero, I'm fine with it, and I'll shove it in a retirement account somewhere. I'll do it through ETFs. Just FYI, I guess, for you crypto nerds in America, we have crypto ETFs in Canada for both Bitcoin and Ether. If you're trying to get exposure to the crypto markets, but you want to do it in a registered account, a retirement account, or you just don't want to open a crypto account, see if your broker allows you to trade in the Canadian exchanges, and if they do, you could just buy. We have US dollar denoted and Canadian dollar denoted Bitcoin ETFs. PECQ is interesting. All right, we're into the P's. Pool is interesting. I generally don't trade stocks that are that expensive, but that's, you know, nearly all-time highs. PPSI, power distribution, transformation. See, like even PPSI, which is and this is mainly for Brett, right? This is a utility, right? A boring old utility, right? Power distribution type of thing. So what do? It engages the manufacture, sale, distribution of on-site power generation. So they sell generators. It's at 5, and 6 is only right here. So it's easier to get this particular trade for this 2-to-1 risk reward than it is AMRN, which is a pharmaceutical, I think, right? So less capital on a safer instrument, an instrument that's less likely to get cut in half tomorrow, right? So I really like that one. LMNOP, I don't think there's going to be a lot of Q's and R's. Peloton. QTNT, man. Still watching. I don't think it's going to move much. QTRX. Oh, there we go. ARLY. I do like, and this is, I don't have any math behind this, but I very much do like stocks that I see in multiple, scans. I don't know why. It shouldn't. It just means that they meet the same kind of criteria. But I saw that, I think, in both the rounded bottom scan and in this scan that's a close to moving average scan. So that's interesting as well. So it's between FUBO and R scan. So the Stats Edge Pro guys, you're going to get both of those and my thoughts on them. I think YouTube's going to get FUBO. It's a little bit higher volume, a little bit more of a trader stock, whereas ARLY seems a little bit more speculative. You're going to want to just know a little bit more, right? And I know the audience in Stats Edge, and I don't know always the audience in YouTube, right? So TRLI. Dope. This is a weed company. No, immuno-oncology. I don't know what that means. Move on to the next one. Twitter of all things. Twist, TWST. Ooh, there you go. That's a chart for you right there. It's an interest rate ETF. That's why it looked so messed up, if anyone was wondering. All right, we're getting there. WVE, well science. This one hurt me before, but man, it looks good now. All right, WVE. I bought WVE, I think it was on this candle. And then I sold a little bit because we had a really good day, and then it kind of fell apart after that. It's funny, you'll see a stock like months later and just get like a visceral response. Oh, we did it, guys. 250 names on that list, and we went through them all. Okay. All right, so FUBO wins. Let's go through any for 5 minutes. Then I got to go. Anything that you guys want to look at. Let's take a look at Snap. Again, relative strength in that Snap for sure. Not only short term, but long term. Man, the kids still use Snapchat, I guess. It's tripled. I like it, right? I think, you know where you're wrong. Kind of a break and a hold under 60 is probably where you're wrong on Snapchat. So that one's holding fairly well. If you're a longer term trader, you've got that support, and then 50 is like the big number, right? It's hit 50 and held a handful of times. So as long as you're holding above 50 on this one for a long term trade, I think you're okay. If you're a shorter term trader, I think holding over 60 is what you want to watch for. Resistance, you've obviously got to get over there. If you don't get over here soon, it may just be one of those where it spends a lot of time between 50 and 60. Roku, same kind of look, right? Strong, relatively strong here. You've got this kind of falling wedge that it may have just broken out on Friday. That's interesting. Doing much better in the market. You got to check Roku under 323 or under 300 if you're longer term. And then GHT. Now, the one thing I will say is that these stocks so far will move together. This one I actually really like, this GHT, just the look of. Again, it's a little bit slower. You're talking 20 here and 30 here. So it would have a big move to get back up to 30. So it's not really something that I would trade. But again, all of these are doing much, much better in the market. So these are good relative strength picks. I think you did a good job with these, right? Just identify these points that you're wrong at, right? And then determine what type of trader are you. Are you a shorter term trader and you're going to use a shorter term stop like that? Or are you holding for these ones for maybe a longer term investment versus the market? And then you have to check these guys out here. All right. So right before we go, let me actually just do this and just do my, hey, look at what I did kind of thing. Right, here's the website. Link is in the description below. Let me actually go full desktop and see. You don't need to see me. There we go. Right, come hang out with my website. If you're not interested in Stats Edge Pro, what we got for you is these are the two trading tools that I use. These are affiliate links, so they help out the channel. If you're interested in either of those, if you buy using that link, that will help that out. This free trading course, I got to figure this out. This website takes a long time to load. But this is 39 lessons with me and my wife, teaching her how to trade. So again, this is free, 100% free, will always be free. Every now and then I'm now throwing in a, hey, come click on this and come here. But yeah, so that's a nice free trading course for everybody. So check that out. It's intro to advance, about me, and then a public blog. Stats Edge Trading Pro, you can find up here in this corner, and you can find right here. So this is what we offer. It's my night watch lists and net analysis. I'll just show you what a sample one of these looks like, and this is what I'm about to go write. I write this one each night. This is kind of the main crux of the product, so it's basically what you guys just sat through for the last hour, but I do it for you, and you can just read it before the market opens. So my thoughts on crypto, my thoughts on the equity markets, right? So right before, this is the day before that sell-off, right? And this is what I wrote about the markets. We had this RSI divergence, so I pointed that out before the down day, and I was worried that we closed under that 123 area. I still said, hey, it's until the trend changes, we're going to stay bullish, but I'm worried for these reasons. News that's happening the next day, relative strength. I was hoping for Nostos, maybe. Right, same kind of thing. I showed the relative strength in the tech markets, which helped us out, and the relative strength in the growth markets, which helped us out as well. These are the stocks that I put on watch. I just kind of write a little line, say this is why I'm interested in them. This also links to this, which I update every night, which just has the stocks that I'm interested in, areas that I'm interested in, and stop out. That's just, again, it's not an alert service, but those are just kind of the areas that I'm watching. On top of that, you get access to, you get access to my scans, which, right, I just show you all the different scans that I use, why I use them, all the codes for them. And then lastly, do I have it here? I won't share that just because people are chatting in there. But, we have just a Discord room. Again, it's not like a live, I'm going to be on a mic or anything all day, but it's just saying, hey, we can shoot the shit in there, but at the same time, if I see something about the market that I want to inform everyone in real time, I can just ping everyone and say, hey, take a look at this. So again, come check it out. Let me know what you think. Feedback is always welcome for people who are in there currently. And I think that's going to be it for the day. It looks like I may have missed the sun. It's going to start raining. But so I'm going to do the video. That will be up fairly soon. I can go full while I do this. So yeah, I'm going to do the video. That'll be up whenever it's done rendering, so sometime tonight. Then I'm going to move over to the product. So for the Stats Edge Pro guys, I will ping you in our Discord when that's done, so you can go read all of that. And as always, thanks everyone for coming out. It's a cool time. Apart from TrendSpider, was the other software that wasn't working? Oh, I'll get that question before it goes. Koifin. And I'm not affiliate with them unless somebody knows someone at Koifin and they want to reach out. I'll just paste that over there. They do a lot of, it's essentially like Bloomberg terminal quality research. Their charts and stuff isn't as great as Trade Ideas or anything, but it's not what they're trying to do. They're where you go. TrendSpider and Trade Ideas, you go wide. You can search for anything that you want to search for. Koifin goes deep, right? So if you want to know like what is inside the XLE, you can find that in Koifin and things like that. So that's the link. Go check them out. Again, not affiliate, in case someone from Koifin sees this video or someone tweets at Koifin and says, hey, you should check out this Mike Noss guy. He uses all your shit and you should pay him money. That would be fantastic. But thanks everyone for coming out. Again, everyone, I'll ping y'all in a bit when that's done, and enjoy the rest of your weekend. I'll see everyone on Monday.